The second surge of COVID has been at least 3 times worse than the first surge, and many cities have been affected by restrictions on economic activity. So the Reserve Bank has decided to announce what you can call the healing touch to the lowest strata of borrowers and to some lenders as well. Well, it is important to note that there is no across the board advantage that the Reserve Bank has given. Last time around, everybody got a moratorium. Everybody could restructure their loans. This time, that kind of universal benefit is not given. Specific categories of borrowers and lenders have got a benefit. First, let's begin with the lenders. You know, every time there is a problem in the economy, people will default. So lenders have a problem. 3 categories of lenders have been given benefits. Let us start with the banks. What benefit have the banks been given? The banks have been given what is called the LTRO, a term repo facility. Under this facility, they can borrow from the Reserve Bank a sum of up to 50,000 crore. Reserve Bank will give them that loan at 4%, provided the conditions are that they have to lend it to the medical community. Those who are in some way related to either, hospitals, oxygen equipment makers or importers, vaccine makers or importers, etc. And the other sweetener for banks is, to the extent they have given COVID loans, those loans get priority sector status. Priority sector is always good for banks because they have to give 40% priority sector loans. They have to give it to farmers and small workers, which is usually an expensive loan, a risky loan. If they can give it to hospitals, they are better off. So it's a temptation to use priority sector for these loans. Plus, to the extent they have given COVID loans, the amount of money they keep in the reverse repo window will earn a higher interest rate. What is the reverse repo window? Every day banks have some money which they have not lent to anybody. That they can put away with the Reserve Bank, usually at 335%. But now, to the extent they have given COVID loans, they can keep their extra money at 3.75%. So it's a temptation to make them give COVID loans. The second set of beneficiaries are, I'm clubbing them together, banks and NBFCs. What is the advantage they get? They get to restructure small loans. Typically in this kind of economic restriction environment, it is the informal sector, the MSMEs who are affected. So all borrowers under 25 crore exposure will be allowed to restructure their loans so that they don't become NPA. If they become NPA, banks have to keep provisioning. Now, there are some people who have already availed and some people who have not availed of it in the September round last year. Those who have not availed, for them a new window opens. Last time they must have thought, I can manage one season, but now another season of no activity. More people may want to recast their loans. For those who have already restructured their loans, there is an advantage because they thought that, okay, I have lost 2 months of economic activity in 2020. With that, they have redesigned their loans. Now, they have lost 2 months in 2021 as well. So, banks have now the option, banks and NBFCs can increase the repayment period. They get that advantage. So that's the second set of beneficiaries. The third set of beneficiaries from a lender point of view are the small finance banks. The small finance banks get to borrow up to 10,000 crore from the Reserve Bank. Again, that is a repo facility. It's a 3-year loan that they can borrow from RBI. And the condition is that they have to lend it in units of 10 lakh to borrowers of less than 10 lakh. So really the MSMEs, the SMEs, the micro borrowers are benefited. Plus, whatever loans they give to microfinance institutions will get priority sector status. As I said, that is a very big temptation for the banks. They like their loans to be considered priority sector status to fulfill that obligation. Now let us look at the beneficiaries from the borrower's point of view. There are 3, actually there are 4 beneficiaries. The biggest beneficiary are all those medical borrowers, because banks now will be chasing them. I'm getting cheap money, why don't you all take it from me? So the medical borrowers are the biggest beneficiaries. The second set of beneficiaries are those who have already taken loans of 25 crore. Now they can restructure it in case their business is not doing well. Then those who are potential borrowers of up to 10 lakh are also advantaged because the small finance banks will chase them and say, I've got cheap money, do you want to borrow? And the third set of beneficiaries are the microfinance institutions. Banks will be willing to give them more money because it gets classified as priority sector. A final beneficiary is the entire market, the fixed income market, the loan market. Why? Because the Reserve Bank also announced the second tranche of what is called Government Security Acquisition Plan, or GSAP. Under this plan, RBI buys bonds from the market. When RBI comes and buys, it has an impact of pushing up the bond prices and pushing down the bond yields. RBI said it will buy 35,000 crore of government bonds on May 20th. The impact was immediate. You saw the 10-year yield go below the 6% mark, and the Reserve Bank's observations on inflation were also not hawkish. They said, yes, there is a commodity price inflation globally, but our harvest is good, and so inflation will be soothed. That also had a benign impact on the interest rate market. Everyone thought that, at 6.7%, a home loan is very, very attractive. Now, the way the RBI is moving in the interest rate market, it looks like loans prices, interest rates will definitely not rise. Maybe there is a chance that they fall a little more. So that net is the impact of the RBI's announcements.